When you're facing an unexpected expense or a tight budget week, applying for a short-term loan can feel like walking through a financial minefield. You might be wondering if you're going to get instantly turned down because of your credit score, or if a lender is going to demand stack upon stack of pay stubs, W-2s, and employer verification calls. If you've looked into possible finance, the central question on your mind is almost certainly whether or not they check your income, how they actually verify what you earn, and what happens behind the scenes when you submit an application. The short answer is yes, possible finance does check your income. However, the way they check it is completely different from a traditional bank or a standard personal loan lender. Understanding this difference is key to knowing whether you will qualify, how to avoid an unnecessary denial, and how to set yourself up for approval before you even open the app. Most traditional lenders require you to manually prove your income by uploading recent pay stubs, bank statements, or tax documents. Some might even contact your supervisor directly to verify that you are actively employed. That creates a huge amount of friction, especially if you need money quickly or if you work gig economy jobs, freelance, or receive non-traditional income. Possible Finance skips that entire manual verification hassle. Instead, they verify your income digitally by asking you to link your primary checking account through a secure service like Plaid. Once your checking account is connected, Possible Finance's automated system analyzes your real-time cash flow history rather than making you fill out long paperwork. Specifically, their algorithm looks back through roughly 90 days of bank activity. They are checking for consistent, regular direct deposits or recurring transfers that prove you have money coming in on a predictable schedule. While general guidelines suggest earning a baseline income, often around $750 per month or about $100 per week in net earnings, the consistency of your deposits matters just as much as the exact dollar figure. This brings up a major fear for many applicants. What if your credit score is poor or non-existent? The good news is that Possible Finance does not pull your traditional FICO credit score from the major credit bureaus to make a decision. There is no hard credit inquiry, which means simply applying will not drag down your credit score. However, they do review specialty credit reporting databases, such as Experience Clarity Services, to check your recent borrowing habits and ensure you don't have an excessive number of active high-interest loans open elsewhere. Another common concern is whether gig work, self-employment, or government benefits count as income. Because Possible Finance focuses on bank cash flow rather than employer pay stubs, any regular, verifiable deposit into your primary checking account can potentially count. Whether it is a paycheck from a W-2 job, payouts from Uber or DoorDash, or regular benefit payments, the algorithm looks for recurring incoming funds that show you have the means to repay a loan. So, what actually determines whether your income check passes or fails? It comes down to 4 primary factors inside your linked bank account. First is deposit regularity. Having at least 2 to 3 months of consistent deposits in the exact account you link builds a strong track record. If you recently opened a brand new bank account or switched your direct deposit to a different institution last week, applying immediately might lead to a denial simply because there isn't enough historical transaction data for the system to verify your income. Second is your account balance stability at the moment of application. Possible Finance looks at your ending daily balance and overall cash movement. If your account is currently sitting in the negative or is frequently hitting zero right before payday, it signals high financial strain, which lowers your chances of approval. Third is your history of account management fees. A pattern filled with frequent overdraft fees or return check charges suggests that your income is already stretched past its limit, which makes lenders hesitant to extend additional credit. Fourth is existing loan obligations. If your bank statement shows multiple active withdrawals for other cash advance apps, payday loans, or high-cost installment loans, Possible Finance may determine that your net disposable income is too low to safely manage another payment. If you are thinking about applying, here are the exact actionable steps you should take to maximize your approval odds. Start by linking the bank account where your main income is actually deposited, not a secondary spending account or a digital wallet that only holds occasional transfers. Make sure that account has at least 90 days of active history showing regular deposits. Time your application strategically for a day when your bank account shows a healthy positive balance, rather than right after a large batch of bills has cleared. Finally, avoid taking out multiple cash advances from other apps right before applying, as keeping your outside debt load low gives your verified income the highest possible purchasing power. By understanding that Possible Finance evaluates real-time cash flow and deposit patterns rather than traditional credit scores or manual pay stubs, you can take control of your application process and present the clearest, healthiest financial picture possible.